In 1999, a company that had never made a single dollar in profit was worth more than the largest car manufacturers and aerospace companies combined. An online pet supply store spent $300 million and collapsed in less than 9 months. A teenager made $11 million in 15 minutes by launching a website from his bedroom, and the world's richest man lost more money in a single year than most countries' entire GDP. This wasn't a movie. This was the dot-com bubble. And today, I'm going to tell you the story of how an entire generation lost their minds, how the internet went from revolution to catastrophe, and how we almost killed the future of technology before it even began. Because here's what nobody tells you about the dot-com crash. It wasn't just about money, it was about belief, about seeing the future so clearly that you couldn't see the present anymore. And that's the most dangerous drug in the world. Let's rewind to 1994. The internet is a curiosity, a playground for academics and nerds. Most people have never sent an email. Online shopping doesn't really exist. The idea of social media is science fiction. Then something happens. In August 1995, a web browser company goes public. They've been in business for 16 months. Wall Street predicts the stock will open at $14 per share. It opens at 71. Picture this. You go to bed as a small tech company. You wake up worth nearly $3 billion. The 24-year-old founder becomes worth $58 million before lunch. He's on magazine covers, barefoot in a throne, like some kind of tech pharaoh. And suddenly everyone gets it. The internet isn't coming. The internet is here, and there's gold in them hills. The fever begins. What happens next is predictable and insane. Every company on earth adds .com to their name. You're not a bookstore anymore, you're books.com. One company that made fish oil adds .com to their name. Their stock triples overnight. Same fish oil, same company, just 3 letters and a period. Venture capitalists start throwing money at anyone with a pulse and a pitch deck. You don't need a business plan anymore. You need a vision. You need to talk about eyeballs and mindshare and disruption. Profits? That's old economy thinking. The logic goes like this. The internet is going to change everything. Whoever dominates the internet will be worth trillions. So you need to grow as fast as possible, spend whatever it takes, and worry about making money later. It's a land grab, and the land is infinite. And honestly, they weren't entirely wrong. The internet did change everything. But they got the timing catastrophically wrong. But the real insanity, that hadn't even started yet. The absurdity accelerates by 1999. The madness has reached terminal velocity. One company raises $800 million to deliver groceries online. Picture a warehouse the size of several football fields, fully automated, robots zipping around. They build these across the country before proving the concept works in a single neighborhood. 3 years later, they're gone. There's a delivery service that brings snacks and movies to your door in under an hour, for free. Imagine ordering a candy bar and having someone drive it to your apartment at no charge. They lose money on every single delivery, and they know it. The plan is essentially, deliver things at a loss, become massive, figure out profit later. They burn through $250 million. To visualize that, imagine lighting $250 million on fire just to deliver potato chips to someone's door. Then, there's the pet supply retailer selling dog food online. The problem? Shipping a 40-pound bag of dog food costs more than the profit on the bag. But they've got a mascot, a Super Bowl commercial, millions in marketing. 9 months after going public, they're bankrupt. The mascot becomes more famous than the company ever was. The numbers get stupid. In March of 2000, the NASDAQ hits 5,048 points. 5 years earlier, it was at 1,000. The index has quintupled in half a decade. People are taking out second mortgages to buy tech stocks. Day traders quit their jobs to trade from home in their pajamas. There are commercials where a tow truck driver and the guy getting towed casually discuss their investment portfolios. Investment firms hire kids fresh out of college to analyze internet companies. 23-year-olds who've never run a lemonade stand are telling pension funds which stocks to buy. They rate everything strong buy because the fees from IPOs are too good to resist. The true believers. But here's what people forget. Some people saw the future correctly. There were online retailers losing money on every sale, and everyone called them crazy. But they were building something real: distribution networks, customer trust, infrastructure. They were playing chess while everyone else played checkers. There were search engines so good nobody understood the business model. But the founders knew that controlling how people access information was worth more than gold. These people understood the internet was real, even if the valuations were fiction. They built for the winter that was coming. But they were rare. Most people were building castles made of smoke. And then, almost overnight, everything breaks. March 10th, 2000. The Nasdaq peaks at 5,48. Nobody realizes it at the time, but this is the top of the mountain. And on the other side is a cliff. At first people think it's a correction, a healthy pullback. Buy the dip, they say. The dip keeps dipping. By April, the Nasdaq has fallen 25%. Billions of dollars in paper wealth evaporate like morning fog. But surely this is the bottom, right? Wrong. The cascade. What happens next is a slow-motion avalanche that lasts 2 years. Companies worth billions become worthless. Fashion retailers that spent over $100 million in 18 months simply vanish. Pet supply stores, grocery delivery services, on-demand everything, all gone. These aren't quiet deaths. Thousands of people lose their jobs in a single day. Office parks in Silicon Valley sit empty, furniture still inside, computers still on desks, like everyone just disappeared. Those mascots and Super Bowl ads become symbols of the greatest financial delusion in modern history. By October 2002, the Nasdaq bottoms out at 1,114 points. That's a 78% decline from the peak. $5 trillion in market value has vanished. That's not a typo. $5 trillion. If you stacked that much money in $100 bills, the pile would reach into space. But the numbers don't capture what it felt like. Imagine being a 28-year-old software engineer. You joined a startup in 1998. Your stock options were worth $2 million on paper. You've already picked out your dream house. You're planning early retirement. Then the crash happens. Those options? Worth nothing. Zero. You worked 80-hour weeks for 3 years for a paycheck that could have come from anywhere. Or imagine putting your retirement savings into tech stocks, because every expert, every magazine, every financial advisor said you'd be insane not to. You watch 70% of your future disappear in 18 months. You're 55 years old. You can't retire anymore. You're working another decade, maybe 2. The dot-com crash didn't just destroy companies. It destroyed belief itself. So what's the moral of this story? First, fundamentals matter. Eventually, you have to build a real business. You can't grow forever on someone else's money. Second, timing is everything. The dot-com evangelists were right about the internet. They just got the timeline wrong by a decade. The internet did create trillion-dollar companies. Online retail, search engines, social networks, all of it came true. But it took longer, and most of the early companies died waiting for the future to arrive. Third, and this is the big one, euphoria is the most expensive emotion in investing. When everyone agrees something is a sure thing, when the fear of missing out overwhelms everything else, that's when you need to be most careful. Here's the uncomfortable truth. We didn't learn, not really. If 1999 was the rehearsal, 2021 was the remix. In 2017, companies added blockchain to their names and stocks tripled overnight. Sound familiar? In 2021, people took out loans to buy JPEGs of cartoon monkeys for hundreds of thousands of dollars. In 2023, AI became the new magic word. Same fever, same logic, different technology. The pattern repeats because human nature doesn't change. We see the future, we believe in it, and we convince ourselves that this time is different, that we're smarter, that we've learned. But the dot-com bubble teaches us something profound. The future always arrives, just never on the schedule we imagine. The companies that survive aren't the ones with the best marketing. They're the ones with real products, real revenue, and the patience to wait. The final word. So the next time someone tells you about a revolutionary technology that's going to change everything, believe them. They're probably right. But when they tell you to mortgage your house because you can't lose, remember the pet supply mascot. Remember the 24-year-old analyst rating everything a strong buy. Remember that March day in 2000 when $5 trillion started to disappear. Remember the fish oil company that became worth 3 times more by adding .com to its name. Remember that the future is always real. But the path to get there is littered with the bodies of companies that arrived too early, spent too much, and promised everything. Technology didn't die in 2000, but innocence did, and every bubble since has been a faint echo of the one that nearly erased the future. Thanks for watching.